New home buyers and people that are getting dropped from their existing insurance companies when they're trying to purchase home is becoming a real problem here in California, as insurance companies more and more aren't writing new coverage. And this is because of all the wildfires and other natural disasters that have occurred, and it's certainly put the insurance companies on the back foot.
I'm Kiwi of the coast, the agent with the most.
Helping you maximize and sell the value of your coastal home. Right, let's dive into the insurance issues. State lawmakers have spent several weeks with insurance companies trying to get them to reopen for business, trying to make it easier for those companies to charge higher prices so that they can entice them back into the business. The clock struck midnight on Monday the 11th, marking the final deadline for introducing a new bill to be voted on before Thursday's close of the legislative session. A deal has failed to materialize. Major changes to the insurance regulatory system may still come this year, either from the Governor Newsom, or the insurance commissioner. State Assembly could also hold more sessions, and this could set the stage for legislative action next year, 2024. The proposal would have dealt with concessions to insurers on those sticking points, which include reinsurance costs and catastrophic modeling, while also generally requiring insurance companies to stay in the marketplace with several caveats. Since the beginning of the year, more than half of California's insurance companies, and that's in a $12 billion industry, have stopped writing new policies. And this makes it very, very tough for buyers who already face those higher interest rates, now trying to secure reasonable and affordable home insurance before they can close. Remember, lenders are going to require it. State Farm, USA, and Allstate have effectively stopped writing policies. Farmers, they put a cap on the number of new policies they're willing to write every month. And Travelers and Nationwide, they put restrictions on policies that make it very difficult for homeowners to secure. The companies, of course, say that the state regulators aren't allowing them to raise costs enough to offset their ballooning costs of insurance in the state. And many of these insurance companies had filed requests for double-digit increases, which makes it very expensive for homeowners and those people that have lost their insurance and trying to gain insurance back. Consumer Watchdog is advocating for changes big time here in California, specifically targeting rules enacted by U.S. Representative John Garamendi, who was the state's first insurance commissioner. While another mandates that they look at past data and not look at those new models that are modeling the risks associated with wildfires and floods and natural disasters here in California. Consumer Watchdog argues that allowing insurers to pass along reinsurance costs can lead to an unregulated market and the potential for conflicts of interest, as many insurance companies and reinsurance companies are connected entities. They also contend that using forward-looking models could result in opaque, unverifiable pricing algorithms. Now, while the insurance commissioner has the authority to put regulation changes in place, the real issue is the time it takes to implement them, which will affect consumers in the short term. Make sure you click on the video that's on your screen right now so you can watch the next video in our real estate series. Click on it now and I'll see you there.